So imagine this. Mike and David are neighbors who are in their early 30s. They recently got married and they just had their first kid. Their life sounds super similar, right? So they both decided, why not get a life insurance policy? Mike goes for a 20-year policy, whereas David goes for a whole life policy, which means lifelong protection. Now, fast forward to like 25 years. Mike's 55 and his policy expired 5 years back. And he's like, yeah, I'll renew it later. But now his health isn't the same. And suddenly it's either super expensive or not even possible. David, on the other hand, is chilling, he's relaxed. He's got a whole life policy with him, which means lifelong protection. So he's still covered, he doesn't have to worry about any surprises nor any stress. Did you see what happened here? They both had the same starting point, but now they have a completely different situation. And honestly, it all came down to one point: temporary protection or lifelong protection. Part 1. What does protection even mean? Look, before we get into all the types and stuff, let's just simplify this. Life insurance is actually simple. It means if something happens to you, your family receives the money. That's it. The money can be used for mortgages, paying loans, any debts, college education of your kids. So yeah, it's not really about you. It's about the people who depend on you. Part 2. Temporary protection. Let's go back to Mike for a second. He picked a term life insurance policy. And the easiest way to think about term life is, it's like renting protection. You're covered for like 10, 20 or 30 years, and after that, it's done. Now, why do people choose this? It's cheaper, you get a lot of coverage, and it's perfect for those busy years of your life. Like imagine this, you're 32, living in Texas and just bought a house. You take a 30-year term policy to match your mortgage, and that actually makes a lot of sense. But here's the thing most people don't think about. When your term ends, the protection ends too. And your life doesn't just stop at 60, does it? Part 3. The risk people don't even think about. This is where it all gets tricky. As you grow older, insurance might get expensive, your health might change, and qualifying becomes harder. So when your term ends, you're not the same person when you were at 30. You might be paying way more or not eligible at all. And that's the part people don't see coming. Part 4. Lifelong protection. Now let's look at David. He chose a whole life policy, which is also known as lifelong protection, which basically means he's covered when he's 35, he's covered when he's 55, and he's also covered when he's 75. It doesn't expire like ever. And here's something interesting. Some of the policies actually builds cash value over time. Don't overthink that. Just think of it like a small reserve that grows slowly tax deferred. For example, let's say Sarah, who lives in California, just bought one of the whole life policies at the age of 30. Over time it builds value, she can borrow against it, she can use it during emergencies, or even use it later in life. So it's not just something that works after you're gone. It can also help you while you're alive, because it has a lot of living benefits. And this is exactly where products like this start to make sense. Because when we say lifelong protection, we're not just talking about the idea, we're talking about the real policies that are built for that. For example, something like Family Protector 2 from LCBA Life. It's designed for people who don't want to keep revisiting this decision every 20 to 30 years. You get coverage that lasts your entire life, fixed premium so that it suddenly doesn't get expensive later, and that cash value we just talked about that slowly grows tax deferred in the background. So instead of wondering, will I still be covered later? You already know the answer. And honestly, that kind of certainty, that's what lifelong protection is all about. The biggest mistake people make, they're like, oh, let me get something for now and we'll figure out later. But life doesn't work like that, does it? Things change. Health, income, responsibilities, and waiting can actually make things harder. So how do you choose? It's pretty simple. Go for term if you want something affordable or you're covering specific years like a loan or raising a kid. On the other hand, go for a whole life policy if you want permanent protection, you don't have to worry about expiry, you like having something that builds its value over time. Look, at the end of the day, it really isn't about policies, it's about peace of mind. Temporary protection covers a phase of your life, whereas lifelong protection covers your entire story. So, the real question is, are you protecting your moment or your lifetime?